In today's video, we see that the market is losing momentum, and that's okay. That's not scary at all, at least not to us over here. But can the market correct too much, beyond what would be acceptable to still maintain the uptrend? What could possibly justify a real turnaround over here? That's what we're gonna talk about in this video. So welcome to the Finance Hydra channel. My name is Nathan, retail trader. It is a pleasure to see you guys over here. And as we discussed it yesterday, yes, we see the indices correcting. We see SPY, we see QQQ making a short-term correction, and that's okay. As far as I know, that's a harmless pullback. Why? Because we are still above many important support level. SPY is still above the $500. It is still above the previous top level over here around $500 as well. We are still above the 21 EMA, the exponential moving average on the daily chart. We are still making higher highs, higher lows. So despite this pullback over here, we are still bullish. The trend is still bullish, all right? If we lose the $500, I see SPY making a sharper correction to the 21 EMA on the daily chart, and this is it. This is not gonna be anything scary. This is not gonna be a reason to panic, etc. It is gonna be just a harmless pullback, and honestly, any bullish reaction around this support level, in my humble opinion, would be just another buying opportunity, because the risk-reward ratio is always very good when the trend is bullish and when the price is near support levels. That's quite simple, all right? It is not rocket science, but okay, we are correcting. SPY is correcting. QQQ is also correcting. It is approaching the 21 EMA over here on the daily chart. Okay, we are losing momentum, but we are not necessarily reversing the bullish sentiment over here. In order for SPY and the QQQ reverse their bullish sentiment, we gotta see a crystal clear bearish evidence. We gotta see a major bearish chart structure. And although we don't see anything incredibly dangerous on SPY, we see a possible bearish reversal chart structure on QQQ. We see a double top chart pattern over here, a crystal clear possible double top chart pattern, because it was not triggered yet. QQQ will trigger this top signal if we lose $421. If you ask my humble opinion, I believe that QQQ could trigger a sharper correction if we lose the $490 over here, the previous support level, technical support level, because this key point over here would be the last meaningful support level on the daily chart before a sharper correction to the 21 EMA on the weekly chart. But of course, the $490 is an important key point, but if SPY by any means reject this bullish candlestick over here from last week, that would be a particularly bad signal already. So by losing last week's low and by losing the 490 over here, I believe SPY would trigger a sharper correction. We see the $479 as the previous top level, which could act as a future support level as well. But I believe that a sharper correction could materialize if SPY loses these key points over here, and especially if QQQ triggers this double top chart pattern. That would be a meaningful mid-term reversal. That's what it takes for the indices actually reverse the bullish sentiment over here on the daily chart, at least, all right? This is not gonna be a meaningful bearish reversal long-term speaking, because guys, on the weekly chart, it is gonna be extremely difficult for QQQ and SPY reverse their bullish sentiment. In fact, QQQ has yet to reach its technical target of this bullish flag, which we did identify together in this channel. Therefore, if you are still not a subscriber, consider subscribing, because guys, we are here every single day. We are here every single day describing the market's movements and trying to make some sense of all of this craziness over here, all right? And yes, we see this bullish flag chart pattern. This flag chart pattern was triggered, and so far we are doing very well. However, its next technical target is around $500. Wow, that's a very specific number, right? And we are heading there. We are at 435 right now, but we still have more upside left. The $500 is our next technical target, long-term speaking, on QQQ. We still have more upside potential. So even if we see a pullback over here, I believe this is not gonna ruin the bullish bias. But yes, by triggering this double top chart pattern, we are gonna see a sharper correction that could last for a few weeks or even possibly a few months on QQQ. What's more, a correction to the 21 EMA on the weekly chart would be totally normal because, guys, the last time we were around the 21 EMA on the weekly chart was in October 2023. So yes, it has been a while. We deserve a sharper correction if we materialize an actual bearish reversal chart structure. Nathan, as long as we stay above the 421, the trend would remain bullish. Yes, it would still remain bullish. I don't see any particular reason to believe that we're gonna see a sharper correction. SPY is a little bit more, is a little bit harder to read right now at this moment, but I believe that the 490 over here is the most important key point mid-term speaking, all right? Just like the 421 is for QQQ. So let's watch these key points from now on, and let's pay attention to how this pullback is going to materialize in the next few days. So far, we don't see any meaningful bottom signal. We don't see SPY or QQQ making any meaningful reaction above their support levels. But if they do, of course, we are gonna be here to keep you guys updated on this. Now, our dear stocks are correcting today, except Tesla, which is flying right now. And that was about time because we dropped 34% since December 28th was the previous top level over here. Since then, we made a new bottom around 175. We lost 34% in value over here. That's a quite dramatic correction while everybody else was going up. So naturally, Tesla is trying to catch up with the broad market, even if that means that it is not gonna correct while the entire stock market is gonna correct. So okay, this is a very good movement for Tesla. We are trying to react, and we are about to reach our technical target over here at 206.77, which is this gap resistance level. Remember, my dear friends, gaps work as magnets for the price when we see a crystal clear reversal. And to us, Tesla triggered a crystal clear reversal over here around the 180s. And I gave you guys many buy signals on Tesla around the 180s on our Telegram channel. The QR code is right here on the left corner of our screen. So join our Telegram channel right now because we have been nailing many amazing trades over there. Some stocks are going up more than 80%, just to let you know. So yes, join our Telegram channel over here. Nail amazing reversals with us. 73% win ratio, average risk reward ratio 2.45. So yes, we are consistent, profitable swing traders, and we can easily outperform the market. We have been easily outperforming the market for years together now. So come on, just join us over there. Now you may ask me, Nathan, okay, your target is the 206 area. By closing this gap, do you believe that we could go to higher levels? Yes, I believe. However, it is not gonna be that easy, especially if the broad market starts correcting. Since Tesla looks quite detached from the broad market, I believe that this is not gonna act as a real meaningful reversal. But guys, maybe it is going to delay the bullish momentum over here if we see the broad market, if we see SPY and QQQ triggering sharper corrections. But so far so good. Tesla is still under control over here, and by breaking the 206 resistance level, by closing this gap, Tesla's next technical target is $230, the previous support area over here, which is supposed to act as a future resistance according to the principle of polarity in technical analysis. So 230s, that's gonna be the next technical target if Tesla breaks the 206. So let's watch the 206 area very closely from here, because by breaking this key point, we are gonna make a very nice midterm reversal. Maybe guys, there is a chance that we could go even higher if we break this descending channel's resistance line over here. The 230 area is very close to this purple line up here, right? It is very close to this resistance. So what a coincidence, right? It was a previous support level, and it is also around the resistance level of this descending channel. So the 230s are going to be a major resistance level for Tesla. This key point is going to be our nemesis over here. So let's watch out the 230s area if we break the 206. Now, unlike Tesla, NVIDIA is correcting over here. We are losing momentum, and that means absolutely nothing because we are still extremely bullish. As far as I know, we could easily correct to the $746 over here, and that's okay. The main trend would still be extremely bullish. Now you may say, Nathan, but what if we lose the 746? What if we lose the 21 EMA on the daily chart over here? Well, if we do, then maybe NVIDIA is going to trigger a top signal on the weekly chart, and meaning we could trigger a sharper correction to the 21 EMA on the weekly chart over here, and that would be a particularly dramatic correction. Of course, I'm a little bit skeptical about this scenario because NVIDIA would have to lose many support levels, and it would have to make a crystal clear bearish reversal chart structure on the daily chart first before correcting on the weekly chart, but it is something for us to keep in mind, all right? So let's watch the weekly chart on NVIDIA, and let's watch the 746 along with the 21 EMA, because this dual support level over here is going to be extremely important for NVIDIA mid-term speaking. Other stocks are around extremely dangerous support levels. We see Apple dangerously trading around the 180s over here, which to me seems to be a possible head and shoulders chart pattern. By losing this key point, I see Apple correcting to the $167, and that's gonna be quite amazing if you ask me, because I know it is quite annoying to see such sharp correction. Maybe this could even be a short signal for us, but guys, when we analyze the weekly chart, Apple is inside what seems to be a congestion over here. By correcting all the way down to the 167, I believe that could be one of the easiest buying opportunities ever on Apple, even easier than this one over here. So yes, by correcting to such low support level inside a congestion and by making a crystal clear reaction, guys, what's the plan? Just set a stop loss under the 167, around the 166, set a target at 198, and this is it. Don't look at it again, because the risk-reward ratio would be extremely attractive. We're gonna see a correction to a crystal clear support level, so the odds would be in your favor. And this is, guys, this is all about technical analysis. Why do we use technical analysis? To predict the future? That's, of course not. That's silly. We use it for two reasons. First, to gain a statistical advantage. Second, to work with risk management. Technical analysis, just like any other tool like fundamental analysis, tape reading, algo trading, etc., was never created to be used to predict the future, because absolutely nothing can predict the future. Since when Munehisa Homa, the samurai trader, created the candlesticks more than 2 centuries ago, it was never supposed to be predictive. Instead, he created candlesticks in order to understand market psychology. And this is all about the market, right? This is all about trading. This is all about investing, because you gotta understand how other players are behaving in order to react properly to what you see. It is all about market psychology. It is all about behavioral finance. It is all about game theory. If you don't know what I'm talking about, dude, you are in danger over here. After watching this video, just Google game theory, just market psychology. Look for Mark Douglas Trading in the Zone, for instance. Trading in the Zone, The Disciplined Trader. These are two amazing books for you to understand a little bit more about market psychology. So just learn these things, because if you don't, you are 10 steps behind. No, you are 1,000 steps behind the smart money over here. If you do want to have any chance, you gotta understand these things, these concepts before call yourself a professional trader. All right, so let's study a little bit more. I may talk about these things here in this channel if you want, but usually I'm just too focused on analyzing stocks, right? And so why am I talking about this? Okay, Microsoft head and shoulders chart pattern on the daily chart. By losing this key point, I believe we're gonna correct to at least $384. Google is in a very problematic situation because we already lost this ascending channel, right? It was an ascending channel. The trend was clearly bullish. We made some good reactions around the support level. Okay, great. But right now we are frustrating these patterns over here, meaning we are supposed to correct to lower levels. Guys, there is no other way and there is no excuse for this. I do believe we are gonna correct to the 131 again because that's the next technical target. That's the next technical support level on Google since it is losing all of its support levels over here. All right, so guys, to me, Apple, Microsoft, Google, NVDA, these stocks are gonna be very interesting if they start a real correction. So I'm gonna keep you guys updated on this every single day. Remember to subscribe to this channel if you're new around here. Click the like button if you did enjoy this video. I highly appreciate your audience, my dear friends. Thank you very much. Stay safe. See you guys tomorrow.